have a big question, a little story, and then a demo. So the big question is, could fintech make a material difference to saving the world? The little story starts back in 2000, around the same time that this baby came out. I'm still using it. I collect them on eBay, 1 week battery time. And so 2000, I'd finished school, had a big debt, got a job in Bay Street with a firm called investment.com, top of the sort of dot-com boom, right before the dot bomb. And we were writing about personal finance investments. I started writing a series with a local newspaper around mutual funds, doing RSP season. It was sponsored by a bank. I won't say which bank. It's possible it might be one that has logos emblazoned around here as well. The first article was about socially responsible investing, and I thought it was pretty interesting. It wasn't all it was cracked up to be, but you have two balls in the air at once. You're trying to make money, you're trying to have your values reflected. And the bank sponsor was not happy because they didn't have any socially responsible funds at the time. So the second week I thought I would one-up it, and the article was about how if you invested in mutual funds, you would lose 60% of your wealth over the course of your life that you invested in those mutual funds that would be eaten up by high fees. And the headline of the article was, "The feeling is not mutual." The bank sponsor had a similar sentiment. That was the end of that series. And around the same time, the dot bomb was going off, and the guy from the National Post who was working at investment.com, I saw him on Bay Street, and he was trying to sell our fridge. And I knew the time was nigh for finding the next thing to do. And so I thought I liked writing about socially responsible investing, about companies trying to make money, trying to make the world better, and with eyes wide open. So we started a magazine, sort of similar ideas. Everyone told us this was a crazy idea, it couldn't be done. And we grew the magazine over the years, ranking companies, who's leading, who's lagging, who's fixing the world, who's hurting the world, with good, transparent, radical transparency and indicators. And the magazine grew. We're in the Globe Mail. We expanded to the Washington Post. So now Donald Trump gets a copy. That's part of his medicine, hopefully. And we're having fun, and we're making a difference. But it didn't. The whole idea was, if we made it easy for people to be able to tell which companies were leading and lagging, that would kick in a whole series of feedback measures, and we would see a lot of progress. And I think we saw some progress, but what we saw was there were some gaps, and there was some sort of walls that were getting hit with the progress, where people were not being able to push it through. And it wasn't, not like we were one little magazine going to save the world. But if we look at the big picture, we can see there's a number of things going on. We can look at the power structures in society, look at the boardrooms of Bay Street, and we can see that at the current rate of change, sometime maybe in 2050, we'll have gender equity in the boardrooms. We look at what's going on with climate change. The best science tells us over the next 80 years, we're probably going to decimate half of all species on the planet, and potentially more severe consequences. We also have an opportunity and perhaps a narrow window. And then you look around at the inequality, and we've got 8 people now in the world, tremendously successful people, who have more wealth than the poorest 3.5 billion people in the world. So that's sort of the world we're sort of looking at. And so I just got to thinking, who's running this show? How did this all happen? And if you think about it, our market economy and how it works, the people at the top of the food chain are the investors. Capital is oxygen for the economy, and investors, for the most part, not out of any ill will or any nastiness, but they operate in ethical vacuums. And so the idea was, how could we disrupt this capital, this oxygen chamber, and allow ethics to breathe inside it? And so that kind of started with looking around what was going on out there in the investment world and where the gaps were. And we thought, well, are we really sure about this? Are there any examples in history where investors made a significant difference to moving the needle in something important? So we look back to Nelson Mandela's time in jail in South Africa, and the thing that really clinched the South African white leadership at the time to relent and allow Nelson out of jail was when investors cut off the capital for South Africa and started to divest from South Africa. And we looked at examples in the US where investors in the US started to divest from tobacco companies and made it a social taboo, and really led to dramatic declines in smoking that were backed up by lawsuits and more strict regulatory regimes. You remember the days way back, maybe when you were little kids, when you could smoke in a bar or a restaurant. Not anymore, it's a social taboo. And so investors really have the power to confer legitimacy or to stigmatize an industry, and also to make things feasible for people that are in power, whether they're politicians or corporate decision makers. But the problem is, it's not that people don't care. People care about these things. People care about climate change. They care about animal cruelty. They care about all these things, gender equity. But and when you ask them, as an investor, would you like to invest your values that support these things or oppose these things? 70%, poll after poll, and it's rising, 70% of the people say, yes, I would absolutely love to do it. Then you look at who's actually doing it, less than 1%. So 70% say they would like to do it, less than 1% are doing it, and the question is why? And the answer is pretty simple, and it hasn't yet been solved, but the answer is it's a little bit hard. People think they might lose money, and they're not really sure if it's gonna make a difference. And so we started playing around a little bit more, just starting on the climate theme with something called decarbonizer.co. And it was like, pretty ramshackle website, probably would compete with Craigslist for graphic sophistication. And we launched it with a little NGO called 350.org. And it showed how much extra money you could have made if you would have invested your values in favor out of fossil fuel companies into clean energy companies. And it had good real market data. We tested it, we launched it. We showed that the U of T could have made an extra $500 million over 3 years had they done this, which was equivalent to covering everyone's tuition for 4 years. And that got the attention of the chief investment officer at the University of Toronto, who called us in and led to a series of change. And now the U of T is getting out of the worst fossil fuels. We saw the state of Ireland with a citizens campaign took this tool and then helped to take their $10 billion sovereign wealth fund out of fossil fuels and again into clean energy and that energy exposure. And then all of a sudden we noticed that we had this little ramshackle website and we had people using it in 100 different countries. We built it in a weekend, and honestly, you can check it out, decarbonizer.co. It's not pretty, and it's not user-friendly. It's not even intuitive. And we got to thinking, maybe there's something here. And so we engaged, we had some good advisors, and then we engaged with Tribal Media, a great firm in Toronto, good development firm, to help us really think this through and build something that would be more ready for prime time, that didn't look like it was competing with Craigslist on the graphics. And so that is Rover, and that's the little dog, the guide dog to help you find investments that align with your values. And the ROV is return on values. So just as a kind of quick demo we can jump through, you can see here, these are the themes that you can click on to say you want to avoid them. So you can look at these things. Maybe you want to avoid weapons manufacturing. Maybe you want to avoid companies associated with negative environmental impacts, GMOs or unhealthy foods, animal mistreatment. And then you finish this and you can click whatever you want and you get to, okay, calculate my return on values. Show me if this is losing me money. So it's scanning the S&P 500, searching for offenders, removing them, calculating your return on values. Did you make money? Did you lose money? And look at that, interesting. If you would have done this, you would have made more money than had you invested in the benchmark. So, it's what it tells you is not investing in companies on the wrong side of history can actually make you money. And we're seeing a lot of changes happen in society right now where companies that traditionally made money by externalizing cost onto society are now being made to pay the bill, and the companies that weren't doing that are outperforming. So you see your impact facts, you can see how you outperformed, and then you can click the plus on the positive values. You might want to say, well, let's play with this a little bit. Maybe we take the women empowerment positive value, turn it on, and then that influences the weighting on the algorithm to formulate your portfolio. You could look at your sin bin, your personal sin bin, and you say, okay, well, I'm avoiding these things. What happens if I also avoid companies that perform poorly on compensation or other measures? And then you might say, okay, well, I want to unpack this. I don't know if I quite trust these guys on what's a weapons company. So you click this and it opens up. Weapons company definition is two definitions. You have controversial weapons, which are sort of cluster bombs and personal landmines. They make up a really tiny portion of the market. And then you have conventional weapons. So you might choose to unclick conventional weapons. They include companies like Boeing. Some people might just be opposed to controversial weapons. And then you can click the stuff at the bottom and it shows you the various sort of stats you might be relevant as an investor. How big that company is relative to the market, whether or not it's making money over the last 5 years relative to the market. And if you want, you can double click and remove it. So the idea here is everybody has their own unique values. And it's not for me or for Maury or anybody to tell you what you should care about. It's just for us to make it easy to define what you care about and then to see what that means financially, see what that means on the impact side. And then if you decide that you're comfortable with it, you get a formula with your values profile you like, then you can act and go and invest now. And so as a caveat, I should say, this is just for illustrative purposes. We are in talks with two major banks. One of them is TD. We're early stages of partnership. with a couple of other major players in the financial space in Canada and the US. But it's quite nascent, and so you can't yet go and do anything with TD here. But what you will be able to do soon when we launch the MVP is to do this, and for free to download your personal values profile, to download a customized portfolio of 30 stocks that include nothing that you disagree with, but it's diversified and includes only companies that excel at the things that you care about most, and also a list of stocks you may want to steer clear of according to your own values. So that's where we are now. We basically are a magazine research kind of house. We don't know almost anything about web development or anything. But we are good researchers, and we have a good database in synthesizing some 36 different databases around the world, best in class on this kind of stuff. And we're at the stage now where we're looking for a kick-ass developer to come on board and have a fun ride as we kind of build this out and see how we can disrupt the financial markets. So thanks for watching the presentation. Sure. So right now we have 24 indexes, including the Russell 2000 MSCI Equity TSX Composite, and you can select when you start which index you want to do. We just have the S&P 500 as the default.
Is there enough data on microcaps and stuff to invest in, say, the Canadian Stock Exchange or the TSX Venture, for instance? Like, is there enough information available in your databases to, because they're more or less startups or whatever, maybe a bit more than startups as they have funding, but yeah, is there information available?
Sure. So I guess the two things. One is the idea of this tool is to create a sort of algorithm of your values that could be applied to all asset classes. We're starting with equities because that's where the most information is. There's much more information for the larger equities than for the smaller equities. So, but we do have regulatory data, things like, are they paying their fair share of taxes, their CO to average worker pay. We do have those stats for all companies, including small, if they have gender equity on the board. And what most people are kind of first of all concerned about is they don't want to invest in things that are egregious or make them cringe. So, animal cruelty or some severe human rights controversy. And so we have really good data on who the worst offenders are on that, and some of them are small. And what we find, though, is interesting. A lot of people are surprised that when they collect all those cards, it only adds up to 15% of the investable universe. So 85% of the companies are not, super offensive to your values, and it kind of, it's not like you're kind of boxing yourself into a room. But good question. Good question.
How will you make money?
So good question. We have initial ideas. It's sort of like a SaaS referral model. So you come here, and then if we kick you over to a robo, their acquisition costs are $400 to $800. We're sharing in part of that, and then we're also providing an API to the robo for our data to allow people who come to the robo initially or when they want to rebalance to be able to execute. So there's a model there with online brokerages. There's a sort of a similar SaaS model. People use it. You get $1 a year kind of thing for everyone who uses it. And then with banks, again, similar kind of SaaS model. The main thing we have to prove is a lot of banks think that this is a bunk market because they've launched funds and nobody invested in them. And nobody is ever going to invest in these funds if you don't have the education tool, because people, before they invest in something that's not just about finances, they're going to have uncertainty about the returns and whether or not they could trust information. And you have to, if you solve those two things, we think that the floodgates will open, and this could be a, why wouldn't you do it? Why wouldn't you invest your values if you could have similar diversity with similar returns?
Yeah, my question, I think this is fantastic, by the way, well done. Very necessary, I think, given the apocalypse of the environment that you described. How far do you go with digging into how clean a company really is when you're trying to assess them and grade them and score them and take them out of a bucket or put them in a bucket?
Yeah. So we only grade companies on indicators that we feel we can get reliable data information for. And so we call it, decision-ready metrics, decision-ready data sources. So there are some things we would like to be able to measure that we don't have great data for. And we don't promise that your portfolio will be perfectly reflect your values. We just promise that, if there are any big egregious companies that are offside, we have good data sources to a good radar to detect those. And for the data sources that we do have, whether it's CO to average worker pay, or it's carbon efficiency, or if you want to be out of a sector like fossil fuels, or you want exposure to clean energy revenues, or companies growing clean energy revenues, which is a big theme, we can do those things. So there's probably 50 things we'd like to do, and we're only doing about 15 things that we have confidence in where the information is reliable enough to make a decision.